and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. In this edition, we're going to focus on the power sector. Post the passage of the Insolvency and Bankruptcy Code, as more and more stressed assets inch towards liquidation rather than satisfactory resolution, the government has been struggling to find an answer to the issue of power sector non-performing assets, estimated at close to 1.8 lakh crore. Fortunately, the government has realized that power NPAs cannot be seen in isolation, divorced from the deeper structural problems in the sector, and has therefore set up an empowered committee headed by the Cabinet Secretary to examine a range of issues, including fuel allocation, the regulatory framework, PPAs, the payment mechanism, the IBC, provisioning norms, all of which are integral to revival of stress assets in the sector and to avoid a recurrence of the present problems. Needless to say, the committee has its hands full. So, we have put together a panel of experts to help it out with suggestions. Joining me in the discussion are Vinayak Chatterjee, Chairman and Co-founder, Feedback Infra Private Limited; Shantanu Dixit, Co-founder of the Pune-based NGO Prayas, known for its work in energy advocacy; and Piyush Joshi, founding partner, Claris Law Associates, who has been closely involved with the IBC process. Welcome to the show, Vinayak, Piyush and Shantanu. Let me start with you, Vinayak. As someone who has a rare combination of extensive theoretical as well as practical knowledge of the power sector, should we obsess about saving these stressed assets, or should we leave it to the IBC process to work its way through? And in case that does result in liquidation of some of these projects, do we need to lose any sleep at all, or view it as a market mechanism to reallocate resources? Vinayak?
Oh, this is the most loaded question, which traverses everything from philosophy to deep finance. So let me try and get my arms around it.
Okay.
You know, the situation is like this, that you have two extremes. At one level, you have an extreme which is the RBI February 12th circular, which says that 60 days from February 12th, if there is no resolution that has happened, take it to the NCLT, and whatever happens, whatever money promoters lose, lenders lose, haircuts, if the projects are liquidated, mothballed, so be it. That is the process. That is one extreme end of the solution spectrum. The other end of the solution spectrum are people who would argue that these are national assets. In most cases, the specific problem with a power plant is very specific to that location and to that project. And therefore, every solution should be bespoke. You should fix the problem of that power plant and handle matters on a one-to-one basis rather than a straitjacket for all. This is the other end of the spectrum, which I am calling the bespoke model, which is take each individual case and solve the problem. Now, in such cases in life, when you have two extremes, it is always safe to say that take the middle path and take the best of both. But I am going to stick my neck out and say, I am personally in favor of one extreme end, which is the bespoke model, for the simple reason that these are very large investments, they are national assets, they are in the nature of essential utilities, that 70% of the project is public, they provide a service which is the generation of electricity in a country starved of electricity because of power cuts and starved of capital. We can't allow these capital assets to just wilt away because they're national assets. So, to cut a long story short, I would like a bespoke model. Whatever is the specific problem of a specific project.
Okay, Piyush, I have a sense that you will agree with Vinayak, because surely there must be some way of preserving these much needed assets even as we pursue the wrongdoers, whether bankers or corporates. Can power be equated with steel and cement, especially since the present woes are largely due to a variety of extraneous factors? Piyush?
That's right. I completely agree with Mr. Vinayak. The issue that I see has been crystallized in a JPC committee report that has also been submitted on the impact of the 12th February circular on the electricity sector. And the report clearly points out that what has happened is that it has just the extreme solution of the RBI has pushed the whole sector towards a situation where you're going to see wastage of an asset which is necessary to meet the requirements, which is completely avoidable, because first of all, the IBC code is a generic legislation. It was not meant for addressing each and every specific sector, which requires its own framework, particularly in light of the heavily regulated sectors such as electricity, where you could be facing an issue with a project in light of coal linkage, or delay in land acquisition, or delay in the fact that there's no PPA that has been entered into. So all these cannot be, and RBI went in front of the committee, and it's been recorded by the committee also, to say they did not look at any of the specific requirements of the electricity sector, because in their mind it is a situation that demands a cross-sectoral or a apathetic solution, which is to push people into a NCLT situation, which at least as a practicing lawyer, I'll disagree, because I don't think NCLT or an institution or a judiciary should be bogged down by going into details of financing or the specific requirements of each project in order to bring it. And 180 days has not been able to be adhered to under any circumstances, which is very evident. And having a 70% haircut in a situation, 70 to 80% haircut, in a situation where neither the lender nor the promoter is really responsible, although there would be a few cases where you should remove the promoter, that can be done by pledge of shares being enforced or other legal mechanisms. But it doesn't mean that you put the asset at risk and put the lenders at risk on that.
Oh, indeed. In fact, the committee calls the RBI vision blurred. But Shantanu, the argument of those who see nothing wrong with liquidation of power plants, which have actually been created at great national cost, is that we have surplus installed capacity. And I know you also subscribe to that view. And though that might be true today, do we have enough for our future needs, whether of industry or of household consumption? And if not, should we not somehow try to rescue these projects, even though it may not be fair to single out one particular sector for differential treatment? Shantanu?
Yeah, I think the problem needs to be addressed at two levels. The first is there have been number of cases where due diligence was not carried out properly. Developers or promoters took, very significant commercial risk, knowing fully well that there are great uncertainties. So under such circumstances, simply bailing out without making those responsible for such kind of projects is not in the long-term interest of the sector anyway, because then there will always be cases where somebody is bidding very low and then trying to rescue the whole project. So one lesson is we need to really ensure that the mistakes that have been made, those who are responsible for that need to be made accountable. Simultaneously, we need to ensure that we really have a very coherent approach spanning from coal sector policies, spanning from distribution sector policies, which will ensure that we don't end up again with similar kind of situation. We need to think about what kind of capacity we need. There are several states where the baseload capacity is in surplus for next 5 to 7 years. What we actually need is an intermediate and peaking capacity. So unless we really address this whole issue about what kind of capacity we need, simply saying that 1 megawatt of one project is equivalent to another megawatt of demand from some other sector or some other time of the day is not really the way power sector works. So we need to think about the kind of capacity that is required. It's nobody's case that the assets that are created need to be wasted or need to be mothballed. The question is we need to have this balance of accountability and responsibility on one hand, and then ensuring that these things do not recur in future.
Absolutely. I couldn't agree with you more, Shantanu. But Vinayak, the problem is that NPAs are actually only the symptom of a much deeper problem in the power sector. If you look at all the three activities, generation, transmission, distribution is undoubtedly the most problematic. Witness the repeated bailouts, Uday being the latest example. But I understand that you run a very successful distribution business in a few states. So how have you managed to steer clear of the woes of state discoms, especially since tariffs are set by a regulator? Does it really boil down to T&D losses? And if so, how have you been able to bring them down?
Well, that's a very specific business question. We have a business model largely anchored in Odisha. We do, as you rightly said, we distribute electricity over 10,000 square kilometers in Odisha with about 6 lakh customers, and that area is set to double now. We actually have a business model which insulates us from regulatory risk, the risk of buying power and the risk at which the price is sold, the power is sold, which is the tariff risk. We have a business model where we are compensated purely on our technical competence, operational and technical and managerial competence in bringing down AT&C losses, which has nothing to do with the two risks you mentioned. So we have carefully crafted that policy for ourselves, and which has the sanction of the regulator also. But if I may come back to the larger issue, Mythili, while all of us are quite happy RBI bashing, particularly the February 12 circular, if one steps back and even tries to be a little sympathetic to an RBI point of view, I can see that RBI is not completely illogical in the February 12th circular, because it is the regulator of the banking system. The banking system is sitting on a huge pile of stressed assets, some 3 to 4 lakh crores, and they are obviously creatures of circumstance, of policy risks, of policy failures, regulatory failures, promoter failures, banking failures. But these problems are now 7 to 8 years old. So the RBI's point of view could well be argued by saying, unless we come out with an axe like the February 12th circular, which says enough is enough. If you guys, meaning all those of you who are saying solve the coal problem, solve the DISCOM problem, solve the PPA problem, if all of you guys who are saying solve the problem, if you haven't done anything for the last 6, 7 or 8 years when this problem has been brewing, how long are we going to just sit by and watch you ask for extension after extension, model after model? We've had enough. Here is our February 12th circular. Do something in 6 months, or let the natural process of bankruptcy proceeding take its course. So RBI has actually sent a very, very strong message to the system saying, all of you who are arguing for a bespoke system like I am, please get up and do something. So one can't miss that message either.
Oh, absolutely. You couldn't be more right on that, Vinayak. But the fact is there a cost to it? And Piyush, that brings me to my next question. At a time when almost 40,000 megawatts of power plants are already unviable for want of fuel or PPAs, is the RBI February 12th circular, the one that Vinayak referred to, the last nail on the coffin? Because it sets out a very stringent and rather unrealistic time frame, and though it may be in a bit to force the other players to fall in line, government, the coal sector, there are so many other host state governments, etc. What can one do about it? Is there a case really for giving some kind of exemption, some kind of leeway? In fact, the Parliamentary Standing Committee, as it has come down very heavily on the regulator, and the Supreme Court too has turned down the RBI's plea to halt the proceedings against its latest strictures in the Allahabad High Court. So is there a case for a relook, or is this the only way the RBI can force issues?
See, I completely disagree with the notion that a statutory authority such as RBI, which has immense powers, can at a certain point say enough is enough and now we have to come with an axe. The issue is that RBI itself has admitted before the JPC that it did not consider the specific facts applicable to the electricity sector. This has weakened its own case before the Allahabad High Court, because what the statutory authorities are required to do is analyze the facts which are relevant and applicable before coming out with a circular. So if there's an admission that the circular that had been put on 12th February did not take into account the sector-specific requirements of the power sector, they have themselves admitted, and they will get a door has been opened for the judiciary, which is already examining whether this is applicable to the power sector, to simply pick that up and say RBI itself has said it has not considered, therefore we are issuing directions, now go and consider. So essentially what the process that has happened is the 12th February circular was issued specifically maybe to put a thrust on the system, but now with the challenge before the Allahabad High Court and the admissions in the Joint Parliamentary Committee, the road is now open for RBI to say, now I will consider specifically for each sector, particularly the electricity sector or the port sector or the transmission sector, and come out with sector-specific directions or framework for those particular sectors. But it is a process that could have been avoided, and it could have resulted in a better framework in February itself if the process had been undertaken taking in view the fact that IBC is a generic framework, and it needs, and it always needed, infrastructure-specific framework to be part of it, particularly on the basis that infrastructure as a sector, its assets stand at a different footing from totally commercial sectors such as just water, steel is, or trading is, and real estate.
So you are arguing, Piyush, basically for a more nuanced approach, and I couldn't agree with you more again on that. But I'm afraid it's time for us to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion on the issues in the power sector, given that the government has appointed a committee to look into all the issues in the context particularly of NPAs in the power sector. And I'm in discussion with three experts, Vinayak Chatterjee, Piyush Joshi and Shantanu Dixit. Shantanu, before the break, we were talking extensively about the distribution companies, etc. And I know Prayas has an excellent paper on distribution companies, basically questioning the viability of the present DISCOM model on the grounds that it no longer makes sense for DISCOMs to sign long-term power purchase agreements, and also because DISCOMs, you say, are likely to lose many paying customers who now want to migrate to cheaper renewable sources of energy. So could that be another reason to be wary before we rush to save these projects? After all, at the end of the day, the future of these projects is inextricably tied up with the health of DISCOMs. Shantanu?
Yes, absolutely. As our paper suggests, the DISCOMs are facing great deal of uncertainty. On one hand, there is a great rush to migrate sales away from the distribution companies, either through the captive route or through open access route or through rooftop. So on one hand, DISCOMs are losing their paying consumers, and there is great deal of uncertainty about the future demand also. Another factor is many of them are already surplus in terms of base load capacity. So in that situation, we are also talking about going forward distribution reforms in the name of carriage and content separation. So you are in a very peculiar situation that one estimate is to just depend on DISCOMs to have long-term PPAs, but DISCOMs themselves are not certain about what kind of demand they have to serve. So under such situation, the whole sector cannot survive. So we need to really have a vision for the sector in terms of what kind of options, what kind of competition and what kind of PPAs or what kind of capacity addition we need to move forward, and that's the missing link in the whole picture.
Vinayak, would you agree with Shantanu that the present DISCOM model is really outdated and we need to come up with a new model for the reasons that he has elaborated?
Well, I don't know it's a new model or modifications to the existing model, but this economic scenario is like this. Here we have a country that, as per a report which is 1 month old, it says that urban areas in this country increased the average power cut to 7.2 hours per month across urban India, and you could actually extrapolate that to say 15 to 16 hours in rural India. You have industry with close to 90,000 to 100,000 megawatts of captive power. So you have a country hungry for 24/7 good quality power, right? And you have a system where the economy is growing at 7%, God willing 8%. So the question is, the next few years ahead, do you have enough base load? The answer really is that you cannot allow a situation where there is no guaranteed base load in a system. Renewables provide the variable and peaking loads, but any stable system of power requires base load, and currently in the Indian context, the base load is coal thermal power generation. So you cannot avoid the simple economic truth that any economic format, any construct, any regulatory architecture must provide for a base load.
Piyush, given all the problems in the sector, could schemes like SBI Samadhan, where the bank is working with public sector undertakings like PFC, NTPC, NHPC, etc., to handhold stressed power projects, be a better option than selling these for a song or liquidating them altogether? Also, we have to choose between banks being forced to take a huge haircut that will ultimately result in taxpayer money being used to bail them out on the one hand, and have public sector power utilities take over these assets rather than have them sold for a song or liquidated on the other. Which is better? Is it not better to have them handheld by public sector undertakings?
I would say yes, any scheme which enables stressed assets to be looked at by already healthy existing industry players would be more welcome than the NCLT process, because NCLT process puts it within a time gap. It only attracts very specific type of investors which are looking at the asset value and not necessarily the project value, because it is mostly assumed, or after analysis of the data, people will come to the conclusion that the reason the asset has come to the specific NCLT situation is because the business proposition is not viable. Therefore, they start looking at the asset and liquidation value at the second step after suggesting ridiculous or very high haircuts. Therefore, if you have a scheme or any scheme by which that process is like the last resort, and you have a certain amount of industry involvement itself to salvage what can be possible before the liquidation, it will be most welcome. The only issue will be of a bit of conflict of interest which will have to be managed, because PSUs and like GAIL and NTPC have inherently a sort of conflict of interest where it comes for picking up assets at a lower value than helping them realize the value while they are going projects.
I think Piyush made a very valid point, and I know you are a great admirer of renewables, and you also speak about the falling cost of renewables as being one of the reasons why demand for thermal power is going to fall. So please correct me if I am wrong, but isn't the falling cost of renewables partly the result of subsidies, Chinese solar powers for instance, that are being sold at way below cost? So do you really see our dependence on thermal power coming down significantly, given that we are one of the largest reserves of coal in the world? And Vinayak also spoke about the fact that we are a country that is hungry for energy. So can one really think of a world, at least in the Indian context, without thermal energy?
No, that's not the argument. The argument I was making is you can't have a contradictory situation where on one hand you are asking DISCOMs to shed their paying consumers by allowing them to go on open access and having their own captive, and on the other hand also continue to depend on DISCOMs for having PPAs for baseload power, because in that situation the burden of baseload power falls on DISCOMs and thereby on small consumers. So that's the dichotomy I was pointing to. We will need different kind of energy sources including coal thermal. There are no two opinions about it. Another question about the coal thermal is also, if you look at the entire tariff structure in the value chain, there is a significant part of inefficiency built into that value chain itself. There is also significant component of taxation in that. Just considering the kind of capital cost that we are observing for new coal thermal capacity, if the capital cost is in the range of 7 crores to 8 crores per megawatt, the whole tariff that comes out of this is going to be highly challenging to sustain, especially for distribution companies. So the case is we need to really ensure that the coal thermal sector is also able to build plants in an efficient manner. They are able to have efficient tariffs, and then the DISCOMs are not the only entities which are responsible to provide baseload capacity for the sector. Unless we work on all these issues, we will be always looking at state-owned distribution companies and hence their small captive power, captive consumer base to keep on bailing out either different projects or lenders, and that is certainly not going to be a sustainable situation.
Oh yes, we do need a more sustainable model, but Vinayak, at the bottom of it all, apart from the fact that there is a huge overhang of politics, as evidenced by the promises of free power by state governments each time an election comes around, are the woes of the sector really a fallout of power being in the concurrent sector? Could more out-of-the-box solutions like having a committee with representatives from the union and state governments, much like the GST Council, help in restraining governments from announcing freebies that affect the viability of the sector? Failing which, whatever we do now, it will only be a temporary salve, and it'll same situation arise a few years down the line.
So, Mythili, every question about power sector, every discussion about power sector problems will ultimately come to a situation about the woes of the distribution sector, because it is ultimately the customer that buys the power is actually the DISCOMs. So the 53 DISCOMs, not all of them, are entrenched geographical monopolies with political patronage and known for huge degrees of shall we say theft and all kinds of unacceptable behavior. I have for long now suggested a simple solution for attacking the woes of this sector with a national power distribution company that picks up stranded capacity and also creates an alternative vehicle for long-term baseload sustainability as well as price indication. That's a separate subject. Increasingly, what I have to share with you is that the idea has gained traction at the highest levels of the government. We are looking at moves at the highest levels of the political and bureaucratic system to craft a national power distribution company that is probably one of the most sensible practical solutions to the woes of DISCOMs.
But Vinayak, you don't see a contradiction between cooperative federalism and a national distribution company? I do see a contradiction.
I'll tell you why. When NTPC was set up in 1967, the same issue was raised about competitive federalism. Power is a state subject. Why is the center setting up a thermal generation company? I don't think very many people will disagree with the fact, because at that time the political leadership thought that if it was left completely to the state sector, India would probably end up being more power hungry than it is today. So NTPC was set up, power is in the concurrent list, the central government is present in all the 3 of the 4 links, it is present in fuels, it's present in generation, it's present in transmission. I see no reason why it should not be present in distribution.
Yeah, except that the state governments might have a different view. And let me turn to Piyush and ask him, Piyush, if you were to tell the committee, what should they focus on? What would your 2 or 3 main points be?
As Vinayak said, fixing the distribution is the key. The suggestion of an NTPC type distribution company which operates at state levels, competes like GAIL does on gas transmission infrastructure development is definitely a key solution that should be implemented as fast, the faster the better. But also they have to look at development, because the data is very clear that India will be having 11,000 megawatts annually as the increased requirements. And you're also getting into a stage where 13,000 megawatts is going to become obsolete in 2 years and will need to be taken off grid. So you need to develop the infrastructure for generation and look at not to waste existing assets, and how that can be utilized should also be complemented with forward-looking policies.
Shantanu, I'd like to have the last word. What would your advice be to the committee?
I think it has to be really take a long-term view of the sector and really prioritize and coordinate amongst different policy objectives, whether it is in terms of significantly scaling up renewable energy, trying to promote competition at the consumer level, or making sufficient coal available to existing plants. So all these different components will have to be seen in integrated manner, because unless we do that, we will end up one wheel going ahead of the other, and we'll always keep on having these kind of hurdles on the path.
Oh yes, indeed. But unfortunately, it's easier said than done. So the committee really has its hands full. And when you have so many different interests, it's going to be very, very difficult. But for the moment, we'll have to see what happens to these stressed assets. Do they get rescued or do they not? Thank you so much, Vinayak, Piyush and Shantanu, for joining me in this discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.